Okay, personal finance section of the course. There are so many things we could talk about as part of this. Um, and I've, pulled in what I think are some of the most important things for uh, people your age, right? College student age, at least in general. And just wanted to go through many of these things with you for at least a few minutes each. Um, so as we move through this, we'll talk about a variety of different things. Ignore week one up there at the top. Talk about some college funding, banking, establishing credit, budgeting. We'll do some taxes. We'll do, just some broad-based things on a lot of these. Looking at credit cards, loans, insurance. So again, a lot of things. So we're going to start out with paying for college. So we start out talking about grants. Grants are things that don't have to be repaid. It doesn't matter what kind they are. Any of these on here are something provided, and much of this is related to financial need, right, as determined by um, the FAFSA process, right, the federal financial aid process. You go in, fill things out, you give them access to a copy of your taxes, and parents' taxes in many cases, and you go through and figure out how that all works, and it kicks out a number called an EFC. It's an estimated family contribution. Basically estimates how much you and or your family has to contribute to your education, and the lower that number is, the more grants and financial aid that an individual student would be eligible for. Right, so the federal Pell Grant, probably the most well-known out there from the federal government. Again, doesn't have to be repaid. Maximum amount changes every year, creeps up. And so for this upcoming school year, the amount is $6,345, right? It's not a lot of money. If you're an in-state student, that covers about a third of your tuition-ish, right? Requirements, this is for bachelor's degree only. Pell Grants do not apply to graduate school. And you must be a U.S. citizen in order to obtain the federal Pell Grant. There are no limits on the number of people at a given school that can receive this grant. It's all based on need. Other grants, those who are most in need receive those funds first, and the money is limited per each institution depending on how many students are at the school. So the federal SEOG grants. The amounts for these hasn't changed much over the years, actually. Anywhere from $100 to $4,000 per school year per student. And again, this is one of those that has a limited amount of money per institution. State grants, and these are available in whatever state you live in. The state of Colorado gives grants to those who attend school in the state of Colorado. If I'm going to school in Wyoming or North Dakota, then, those states would provide some of this funding presumably as well. And, this is all, again, they're need-based, but it all depends on how much money the state gives to each school, kind of how much they have, and then the state figures out how to provide some of that funding for students towards schooling. Residency is interesting, right? When you're talking about schools, state schools differentiate how much money is charged for in-state tuition, meaning those what residents of the state of Colorado pay. And we'll talk about residency here in just a moment. But so in-state, out-of-state, you can see those numbers. Those are that was for this 1920, 2019-2020 school year. And in order to qualify for in-state tuition, right? So if you grew up in Colorado, your parents are in Colorado, you attended high school in Colorado, right? All those kind of things, it's easy. What becomes more of a challenge is if you were not from the state of Colorado, coming from somewhere else, and then want to work on getting residency in the state of Colorado, so that you can pay in-state tuition, right? And there is a process that goes along with that. Right, which is, right, some of these types of things: living in Colorado for 12 continuous months, proof of physical presence, right, meaning that you have lease agreements, you have rent receipts, right, whatever, that you've been here, and then you've got to go and do some things, right? So if you've got a car, changing your license plate and your driver's license to a Colorado situation there. Register the vehicle in the state of Colorado. I mean, that would go along with getting your driver's license and your license plate, right? Those kind of go hand in hand. That you've got some employment, right, that goes on, that you're registered to vote here, right? That you're basically doing all the things like you're moving here and you're not going anywhere, right? So it can become a challenge, and you take all these records and you fill all these things out with Western, and Western has to follow some pretty strict rules and guidelines around that the state of Colorado sets forth for whether or not they can grant residency to a particular individual so that they can pay in-state tuition instead of out-of-state. So it is a process, and sometimes the answer that comes back from the folks who look at these applications at Western and other places, sometimes the answer is no, that you're still an out-of-state, you haven't met the guidelines that are set forth by state law. So it's an interesting process, and it's not a short one, I'll say that. Other institutional type grants, Western sets aside money for scholarships and things like that for a lot of different reasons. Some of it has to do with need. Some of it has to do with how students do in classes, right? Academic scholarships. So, you can, there's just lots of different things that go into that. And then there's the whole student loan thing, right? So these vary by state and eligibility. Some of these are federal type things. Some of them are state. You can certainly get private loans for education as well. Those have a tendency to have higher interest rates associated with them. And these are available for undergraduate and graduate level students. So just some examples, right? So these are specific types of loans you can receive. The federal direct loans, federal Perkins. Parents can help get loans through, right? So the other two, the direct loans, Perkins loans, these are, these end up being on the name of the student as opposed to the other one being under the name of the parent who's getting the loan to help, you or a student go to school, right? So with the direct loans, there's what's called the subsidized and unsubsidized types of loans. With the subsidized loans, interest doesn't start accruing on the amount that you've taken out until you're done with school or you drop out, right? Either way, if you're not in school for whatever reason over a 6-month period, you start having to pay back these loans. And at that point, interest would start accruing or adding up onto that loan. The unsubsidized loans, interest starts right away. You don't have to start paying anything right away, but once you're done or once you drop out or whatever it might be, you have to start paying those off. But in this case, in the unsubsidized case, the interest starts adding up right away. Technically, interest starts adding up right away on both of these, but the federal government pays the interest on subsidized loans. And there are different qualifications for those, whether you can qualify for the the subsidized loan for that. Interest rates are pretty low, pretty reasonable, 4.5%. The federal Perkins loans are 5%. The Parent Plus, as you can see, is 7.08 at the moment. I went and updated all these yesterday. And of course, there are private student loans options out there, and interest rates vary. And typically are a little bit higher than what you're going to find in those interest rates that are shown there. Graduate loans for graduate school, these are all unsubsidized, and the interest rates are a little higher, right? In theory, those who are going to graduate school will make a little bit more money in their career and so can afford a little bit more interest. At least that's the theory. Whether that's true or not is another story. But the point is there are loans that are available to graduate students as well, and these are all unsubsidized, meaning that you're on the hook for all of the interest, and the federal government doesn't help pay for those kind of things. Scholarships at Western are also part of this. There are, and all of this is determined through FAFSA or grade point average, those kind of things, other kinds of applications. These are typically due for Western as a whole April 1st. And then most departments on campus also have scholarships that are available. And there's an application process for those as well. In the School of Business, ours are due usually around the 1st of March. And then we provide those out thanks to donors who have given money to the School of Business for scholarships, right? Just for whatever they might think they would want to do. You can see a couple of links down there you can check in on. One of the things I'll talk about just real quickly is because the scholarships one is there's just some more details about what's available here at Western, but the tuition discounts are interesting. Um, there's what's called the WUE, W-U-E, um, and that's for states in the Western U.S. They have you have an option if you're from one of those states and you're going to school in another state. You may not qualify for in-state tuition. Let's say you're from Utah, you come over here to Colorado to go to school, and you can qualify for not in-state tuition, but kind of this WUE discount. And basically, what ends up happening is you pay 1.5 times the tuition, in-state tuition. So you don't get all the way down to the 10,000 or a little over 10,000. You don't pay the 21,000. It's basically in between those two. You end up paying 15,000. So, but there's an application process for that as well, and most schools only give out so many of those tuition discounts if you don't qualify for it right away, just because they've already given it out to X number of students. Then you get on a waiting list, right? And so many freshmen don't get it, but maybe by your junior year or something like that, you're able to get on the list as people graduate or leave school for whatever reason. Yep, that's those kind of things. So transferring over to banking now. We talk about debit cards. I think most students that I've talked to understand the difference between a debit card and a credit card. Um, they are very similar. The biggest difference and the most important difference is that when you charge something on a debit card, it comes right out of your checking account, whereas a credit card is basically you're taking a loan um, to pay for whatever it is that you're buying, whether that's food or gas or whatever you might purchase, something on Amazon, whatever. Many debit cards you can also get money out of an ATM, validate that with a PIN number, right? So there's nothing to repay here. You just have to make sure you got money in your account when you're using your debit card, right? Otherwise, you can get into some overdraft fees and things like that. It's basically just like throwing money away. Checking accounts, lots of different kinds of these out there. Some have minimum balance, some have monthly fees associated with them. Sometimes you keep a minimum balance and have direct deposit because of a job or something like that. They'll waive the monthly fees. It just depends, right? These are many and varied. Checking accounts are worthwhile to have even if you don't use physical checks, because most times that's where your debit card, if you're using one of those, would come out of that. And this is many times where if you've got outside bills that you're paying, that money would come out of these as well. Although there are times when you can have those funds, those bills, and what you're paying that way come directly out of a savings account instead of a checking account. But these are worthwhile, right? There's still some places that take checks, only want checks, especially when you're dealing with, we had, for example, a plumber come over the other day, and it was either cash or a check. They didn't take credit cards, right? So that's, and if you don't happen to have a couple $100 in cash laying around for something like that, then it's good to be able to write a check. You just have to learn how to do that, right? Which, that's old hat for many in the older generations, but certainly not as much for teenagers and college students and others who are coming up and becoming more financially independent that way. It does pay to stay in touch with what's going on in your accounts, to check things out frequently, to make sure that there aren't any fraudulent type purchases on your card, things like that. But you only learn about those things by paying attention to your accounts, and knowing what's in there, what's coming out, to check those out every now and again. And by every now and again, that's something that we usually do, just kind of once a week or so, and just kind of look at things. Don't give out your credit card on the phone unless you're the one who's instigating what's going on, because there is fraud out there, right? We have to be careful, just like giving out social security numbers, those kind of things, and just being careful with what you're giving out when you don't know for sure who's calling. When in doubt, hang up. Find the phone number for whoever's calling you, whether it's your bank or a credit card or whatever, and call them so that you're talking to who you think you're talking to. Okay, so I don't need to read all this, but use some common sense and be suspicious. If it sounds too good to be true, probably is. Um, you know, don't push through trying to catch somebody doing something. If it's best just to get out of those situations and again make the phone call back to whoever's in theory called you and try to make those happen. I think most of you guys probably know about ATMs, automated teller machines. We call them the wall. Just because you're sticking your card into a wall and getting money out of it. Typically, there is no fee if you're using your own bank's ATM, but if you're using another bank's ATM or if you're out internationally or something like that, there will likely be fees to use another ATM. But sometimes that's the only way to get cash. So, it's just knowing that up front and what those fees might be so that you're prepared for it and not surprised by it. So there's some banks, there are certainly credit cards through banks as well. And I'll show you some things about credit cards here in a moment. Or as we go through this one, for example, there's some that are pretty student friendly. Banks have some of these as well that are meant for kind of these first timers and trying to establish credit and have a credit card. And, that can be important. There's some, I recognize that there are some families that say don't use credit cards. And that's fine. But, this is one of the ways that's relatively easily to establish credit. So that down the road you can buy a car, you can buy a house, right? You can do those kind of things. So those are things to think about. This is one that I found that was out there for Discover, specifically for students, right? Having a fair credit rating. Credit ratings based on whatever else you've had in your life and whether or not you've paid on time and paid in full and not had late payments and all those kind of things are important. But it's nice to be able to have this 0% interest rate, APR, annual percentage rate. That's what that stands for 6 months. After that, it's 13 to 22%. Now, if you pay off your credit card every month, then that interest rate doesn't matter, right? Because you won't pay interest on it. So, this one has no annual fee. If you go over your limit, there's no fee. I'm sure that doesn't last. Right? If that becomes a habit, then that won't be the case forever. No late fee on your first late payment. Basically just don't have those. And there are cashback situations on some of these. Some of them also will give you airline miles, for example. Most of those they're okay. None of them are absolutely fantastic. Otherwise, they wouldn't be doing it, right? You're not going to get too much for free here. Otherwise, they wouldn't. These credit card companies and banks wouldn't be able to afford, to be able to do that kind of stuff. So, interest rates. I'll take a look. I'll let you take a look at some of this, but there are different ways for calculating interest on credit cards. That 2-cycle average daily balance, right, is not good, right? It continues for 2 billing periods. Most of these are kind of an average daily balance or an ending cycle balance. That ending balance down there on the bottom, they are what they are, right? They're just different methods for what you're doing as far as calculating interest, and they're certainly not meant to be in our favor. They're meant to be in the favor of the bank or the credit card company who's doing that. So it's interesting to get what's called a secured credit card. These are a little bit the amount that you can put on these cards is a little bit less. It's meant to make sure that you can pay it off every month, that you don't have these huge balances. But it can be nice, especially if you're an out-of-state student here at Western, to have a card that you'd at least have enough money to get you home. In some situations, something goes a little haywire, that it's a little more home right now than maybe it would normally. But something goes wrong in the family or whatever it is, and you want to get home, and it's nice to be able to have that credit card to go be able to make that airplane purchase or get on a bus or whatever it is you're going to do and get home. So those are important to work on. A couple of videos to watch. My wife and I like Susie Orman. She's got some great things, and here's a couple of videos you can watch if you'd like to see a little bit more about her points of view, and they're good and they're solid. Budgeting. one of the assignments in the class is to track your spending, and just to look at, make some estimates sometimes. The assignment asks you to look at this over the course of a semester. So think about this for a fall or a spring semester, not just what's going on right now. That's a funny video there at the top to take a look at. It's pretty short. So track your spending. Put savings on autopilot, meaning that when you get paid, that a certain percentage or a certain amount of your paycheck is going to go into a savings account. Just to being able to do that automatically. We've done that for years. We've been able to be good savers. We put money into our 401ks and those kind of savings mechanisms, retirement mechanisms that are available through us through our work. It's important to do those things because many companies will match what you put in, or at least a portion of it. It's important to look at those things. So prioritize your spending. Be careful. You can use cash. This is effective for some people for your daily spending because you can see it going out of your wallet when you're just swiping a card or putting a chip in or something like that. It's different, right? You kind of don't know what's going on. I've even had some people say, "Hey, if I still have checks in my checkbook, I must still have money." Right? That's clearly not the case, but you've only got so much money in there. Build an emergency savings account over time and live within your means. Those are important things. That's been more and more important. You think about all the people who have lost their jobs during this COVID crisis, and if you don't have an emergency savings account and you've lost your job, or at least reduced hours or something like that, that's trouble, right? And then we start depending on the government or whoever else to kind of bail us out. And that can be important and it's a good thing, but what if that wasn't there? We need to help take care of ourselves and be self-reliant that way at the same time. So tracking spending, you can see what you spend. There are apps out there to help you do this. You can do it in a spreadsheet, lots of different ways to do it. But we did this one time several years ago and realized how much money we spent eating out, and it's like, okay, time to slow down and settle down. And we took some of that money that we saved and put it towards our home mortgage, and now we own our home. We don't owe any money on our home anymore. So those things can be really helpful. It wasn't all from we didn't save that much money from our eating out, but it does help, right? So just some sample budgets. You can pause the video and kind of take a look at those kind of things and see what might be important or interesting. So enough. Further savings, thinking about some specifics, right? So a savings account, right? This is basically a bank account that earns interest. Some checking accounts will earn some interest, but those, frankly, right now, interest rates are very, very low for savings accounts. That Wells Fargo amount right there, that 0.1%, right? So you figure around $100, you're going to save 10 cents, right? That would be your interest, and it's just a very low amount. A certificate of deposit or a CD, right? These are not music CDs, right? But these are savings account that are meant to be left in a little longer, that a bank can depend upon that money being there, because they take the money that we put into our savings account and they turn around and loan it out for a mortgage or a car loan or whatever else it might be. So, anywhere from a month to 5 years, and you'll notice that those interest rates, APY, annual percentage yield, right? And rate is something that we pay, a yield is something that we get back, and so 1.5%, right? So a big old $15 on, $1.50 on $100. It's better than 10 cents, right? But it's still pretty low. These have been higher than this historically, but right now, the economy was down back in 2008, 2009. Things have rebounded a little bit, but these interest rates never kind of got back up, and they're just going to go. They'll continue to go down, honestly. But gaining some interest out of this is better than burying the money in the backyard or sticking it in your mattress or something like that. So it's still a worthwhile thing. Money market accounts. These are basically savings account, but they're meant to be a little bit more long term, and the interest rates on these is a little bit higher, as you can see. Individual retirement accounts, Roth IRAs, right? All of these are meant to be retirement mechanisms. IRA to individual retirement account, right? And there are two types of those, right? You can put money in before tax and after tax. And the good part about a Roth IRA that I wanted to spend a moment on here is that since we put this money in after taxes, right? So we've earned our money. They've taken taxes out, and we get our take-home pay or our net pay. That means that we don't have to pay when we take the money out in retirement, right? We don't pay taxes on it, even on the interest, right? So that's a pretty cool feature about a Roth IRA. Annual maximums that you can put into these is relatively low, however, right? $6,000. If you're 50 or over, this is what that should read, then that's up to $7,000. So you're looking at, $500 a month to put in. You can put it in all at once if you choose, but you can do this. We've done this in the past where we just kind of make it a withdrawal from our paycheck, and it just goes automatically into the IRA. And if you did that $7,000 a month, it'd be $583 a month. And so those are worthwhile. Those are helpful, right? You can have several different mechanisms to help with this. For example, there are 401ks, 403bs, just for the different types of employment that you might have. This money comes out before tax, and so you do pay taxes on this when it comes out, both the principal that you've put in and the interest that you earn. Annual maximum on these is quite a bit more, right? $19,500. Max is $26,000 if you're 50 or over. And so those, that $7,000 on the Roth and the $26,000 on this, they're meant to be kind of catch-up provisions for people who didn't start saving right away, and now they figure out, I'm 50, retirement isn't too far away, I should start putting away a little bit more, right? And so you start thinking about that. And honestly, I'll show you something here in a minute. It's important for you to start saving, and if it's nothing else, putting $25 a month away or something like that into something like this, just to create the habit, and to see the value in it is pretty important, right? So here's the 403b. You can see who that applies to, and all of this comes out pre-tax. The rules around this are exactly the same as a 401k. 529 is another savings mechanism, but this is specifically for college. Maybe your parents or grandparents had something like this for you. We have something like this for our grandkids. And so we put money away, although not a lot, but we put money away towards helping our grandkids go to school, and we'll continue to do that, once they hit 18. For the most part, the money can only be used for school. There are some exceptions to that you could look up if those kind of things are important to you. I probably won't spend a ton of time on this, but please understand that banks are around to make a profit, right? They earn interest. The interest rates that they charge on loans is more than the interest rates and the interest that they give on savings accounts and those kind of things, and that's because they're in business to make money. And that's, they're great. They provide a great service to our economy, places for us to put money instead of just kind of, hoarding stuff and sticking it in jars or whatever else it might be. But there are pros and cons to some of those. Credit unions and savings and loans are usually a little bit more member owned, and so you're going to find that interest rates are better in what we would pay on a loan as well as what we might get out of them. But they're still, they're not there to lose money, and they've got to have some money set aside in order to be able to do some things for their members. So these are interesting type things. We use Gunnison Savings and Loan in the Valley for pretty much all of our banking. So we've found that to be something we enjoy, and find that we get pretty good service at those places. Even though they don't provide as many services as some other bigger banks like a Wells Fargo that's more national. Just as an example, there are a lot of those, Citibank, Chase Bank, right, et cetera, et cetera. So I mentioned this as well, that, with retirement plans, they'll set aside money for us. They'll sometimes provide matching funds towards retirement, those kind of things. And so those can be helpful as well. Yep. Um, I basically mentioned that, right? So our money is their liability. Our money is the bank's liability, um, meaning that it's something that they owe us. If I go in and ask for it, they're supposed to give it to me. Um, that's caused problems over time during the Great Depression, and even if back in 2008, 2009, we had the possibility of banks failing, and the federal government bailed them out a little bit. Not all, some, a few, um, but they can be helpful, right? So here's what I was talking about a moment ago, right? So an opportunity cost is, once we make a decision about what we're going to do with money, for example, or we've made a decision, that means we can't do something with that same money because we've decided to do something with it already, right? So if I decide to buy a car, right, it means that because I've decided to buy that car and I'm spending my money on that, it's likely going to mean that maybe I don't have the money to go on a vacation, right? Just as an example. So if right, so these are just examples, right? So if you start saving $286 a month at age 25, you'll have $1 million by the time you get to age 65. But if you wait, right, until you're 35 or 45 to do that, and you still want $1 million by the time you turn 65, you're going to have to save $488 a month if you start at age 35, and $1,689 at age 45, saving that per month if you want to be a millionaire, right, by the time you turn 65. Now that assumes an 8% return. You're not going to make 8% by sticking it in a bank. You've got to do some other things. And overall averages are about 8 to 10%, but it takes time to be able to get all that done. So again, make it a habit. Start saving now. When you start making money in a summer job or whatever else it is you're doing, or maybe you're not working while you go to school, and you're getting into there where you're getting into your first job, then make those kind of things happen. Make sure you take advantage of things. We've certainly encouraged our own kids to do that, and we've tried, my wife and I, to be really good savers so that we're not dependent on others in our retirement, and frankly, so we can go out and have a little bit of fun and travel. Right. So let's talk about some specific credit cards. Here's a friendly one. 0% APR, interest for 18 months. There's a balance transfer fee that you can use to move some money from a different credit card to this one. That can sometimes be helpful. No annual fee, and you can see credit limits usually from about $300 to $20,000. Right, so there's an example of a friendly card. Here's another one. Right, good interest rates, no annual fees, 0% APR to start out. The $0 liability for unauthorized purchases. That's pretty much standard. But it was something that they advertised, so I thought I'd put it down. Here's a couple of bad ones. Right, so in order to start this one out, there's a $200 account processing fee. The interest rate's 20%. $12 per month account maintenance fee, an annual fee, and a $25 credit increase fee each time your limit is raised, even if you didn't ask for it. All right, so they could just sit there and increase your credit limit all the time and just charge you another $25. Right, or there's another one here, $300 credit limit. Yep, you're reading that right. That's an 80% interest rate. Right, and that's fine as long as, again, like I said earlier, it doesn't matter what the interest rate is as long as you pay it off every month. And these are the kinds of credit cards that you're going to, find yourself having to look at if you don't have any credit, or if you've gone into bankruptcy or something like that and you're trying to establish credit again. This is the kind of junk that's out there that you really, really, really want to avoid. And I could add a few more reallys into that, right? But that's interesting. Here's a really interesting credit card. This is a high-end card. American Express, Centurion Black credit card. There's a $5,000 initiation fee, $2,500 annual fee. If you want a card for your spouse or somebody else, it's another $1,500, but there is no credit limit. Cards made of titanium. You see some of the free flight companion tickets. You get personal shoppers at different places, access to airport clubs, free first class flight upgrades, right? All this kind of stuff, right? Really interesting, but by invitation only. And just to answer the unspoken question that you're wondering to yourself right now, no, I've not been invited, and don't anticipate that coming anytime soon. Another interesting video by Susie Orman about when you should close credit cards. You can take a look at that one if you choose. Um, there are dangers, and I've mentioned many of these. Um, having a lot of credit cards. If you've got credit cards, you might spend more than if you'd spend in cash, right? It just depends on your ability to not purchase everything that looks fun or you think you need or whatever else it is, right? And it's always true that credit card fraud is out there. Most credit card companies, certainly the bigger ones, we've had uh, credit card companies contact us and say, hey, we had just gone to a movie here in town in the valley, and there was a charge about the same time over on the Front Range at a drugstore, and we got a text, a phone call, and an email, basically all at the same time, from Chase, who we had at that time, who said, "Hey, is this really yours?" And we're like, "Nope, not ours." And so they took the charge off, and they were very helpful, right, with that. But pretty interesting. Other banking services. Okay, so a line of credit is an amount that's of credit that's extended to a borrower. You can use it for just about anything, and this is based on something that you have. So we have a line of credit, and it's associated with our home, right? So um, we have to have equity or an amount of money that we actually own in the home, right, in order to get something like this. But it just allows us to have this line of credit that's sitting out there. So if we want to go do a remodel on the house or go buy something, we can use this line of credit if we don't have the cash to go out and do it right away, right? So that's kind of helpful, and we've done that for remodels on our home, so it's kind of nice. Mortgages, right? This is essentially, well, this is a loan to buy a home, right? And I'll let you read through those kind of things. Um, yeah, it's a loan to buy a home, right? Is the purpose. Automobiles, right? What does it take to get that, right? Proof of income, proof of insurance, proof you are who you say you are, residence as far as where the car will be licensed, those kind of things. If you're trading in a vehicle, good credit rating. Many times they want a down payment, and patience, right? If you've ever purchased a car, especially a new car, it takes a while, right? It is not a quick thing with all the paperwork you have to sign, um, right? But sometimes, I suppose, a necessary evil. Although some cars are pretty fun. So, property, right? Buying land, don't necessarily need a mortgage. These are called different things by different banks, but you can buy property that you want to do something with. Whether it's if it's empty or if it's commercial property, then it's more expensive and taxed at a higher rate. Not more expensive, but it's taxed at a higher rate than property taxes on homes. So that's something else to remember as you think about just buying attractive land that you think is going to appreciate or go up in value over time. That's something you have to consider. Commercial loans for businesses, um, or right to purchase a business or to start a business or to do something new with a business. Those kind of things. Those are certainly possible, um, and can be. The interest rates, typically speaking, are a little bit higher on those kind of things. Looking at some insurance things for a minute. You can get all sorts of types of insurance: life, vehicle, home. Yep, you're reading that one right too. Alien abduction. Uh, Proving that's a challenge, right? Renter's insurance, natural disasters, floods, fire, right? Those kind of things. Depending on where you live, you might be eligible or have to have even flood insurance, and even through Lloyd's of London and others. Um, there are celebrities and athletes that insure certain parts of their body, right, against injury. Um, you can imagine how that might be if I'm a soccer player and all of a sudden can't, use a leg or a foot or something, a knee goes out, or, there's insurance for those kind of things as well. And you pay what you get for, right? So, meaning that the more you want to insure your body for, the more you're going to have to pay for it along the way. And then you just kind of hope you don't never have to use it, just like home and auto and those kind of things. So, there are all sorts of scams out there related to this. Here's 5 of them. and there are plenty more. People come up with new things all the time. I don't know how they come up with these things or why they would, but another story, I suppose. So things to just be careful about as you think about what might be going on with things depending on the situation. And again, if somebody kind of shows up out of the blue when you're not expecting them for these kind of things, be suspicious. Same thing with quick money fixes, money making schemes, those kind of things. If it seems too good to be true, too easy, then it probably is. Okay, so some other things as we change background here for a moment, thinking about being an employee. Right, a W-2 is what you get at the end of the year. Technically, you get it at the beginning of the year, usually in January when you've worked over the course of a year. And this shows the income you've had, the taxes you've paid, right, those kind of things. And this is what you use to fill out your tax forms. Parental dependency, I don't need to read all this one either, but, sometimes children, even though they're out of the house, can still be claimed by their parents, and it's just a matter of making sure that you're not both trying to claim you, right, the dependent, the child, on taxes, right? That can become a problem, and the IRS certainly frowns on that when we're both trying to do that, both trying to get a break on taxes for the same person, right? That doesn't go very well. Workers' comp, right? Just an example here of some policy and things like that. Injuries on the job sometimes can be taken care of by an employer, and it's important to understand what those are for your specific work situation, right? So you're working in a restaurant, in a kitchen, cut yourself, burn yourself. We had a daughter who worked at City Market in the deli and actually cut her finger while slicing meat, right? So those kind of things, just never know. It just depends. So, but you have to make sure that you're notifying the HR department of wherever you work, or your boss, right? Depends on how big the place is. At a place like Western, you let HR know and you let your supervisor know. If it's at a local restaurant, then you let the manager or the boss know, whoever the owner. So those kind of things are important. Some tax forms, we'd spend a little more time on this if we were in person, but for now, I think many of you are getting in the habit of doing your own taxes, or working on those with your parents. If you aren't, get into that habit, right? It's helpful and worthwhile to understand how to do that on your own, even if down the road you end up having somebody else do your taxes for you. It can be very helpful, right? So self-employment taxes, or self-employment in general, many people are interested in this kind of work. Whether you're an independent contractor, meaning, for example, the example I use in classes, and I'm a basketball and volleyball referee. I've done football and softball and baseball and other things over time, but at the moment it's basketball and volleyball. I go into a high school and work. I'm not an employee of that school district where I walk in to work games. I'm an independent contractor who goes in and works their game for them. And so at the end of the year, if I've worked for a particular school district for that totals more than $600 for the course of the year, then they're required to give me a Form 1099, and then I have to report this on my taxes, right? So that's income, and in this case, I have to pay all of my self-employment taxes, meaning in a regular situation when I'm working for somebody else, I pay half, and the owner of the business pays half. In this situation, the independent contractor has to pay it all themselves. And this is true of self-employment as well. So if you're a real estate agent, if you own an accounting firm, or just a bookkeeping business, something a little smaller maybe, right? All of those things you're on your own, and then you end up having to fill out a Schedule C and also a Schedule SE, self-employment, right? So those kind of things are important to understand up front, and those responsibilities that are yours as somebody who's earning money outside of being employed, right, by somebody else. And then finally, the last bit here is just understanding a little bit about tip reporting. I know many people end up working in the restaurant industry, especially early on in their lives. Some end up working in this for a long time, whether it's in wait staff or whatever else it might be, or owning a restaurant, something like that. And there are all sorts of rules and guidelines. So here are some things to take a look at and understand how this is supposed to work, um, so that you kind of keep yourself out of trouble if you're a tipped employee or end up being one of those who um, is supposed to pay tipped employees as a manager or some other way, and how that's supposed to work. So a lot of things pretty quick. I hope that's helpful. Again, if you have questions, let me know.